Good morning, traders. My name is Peter Rezicek from ShadowTrader.net and the Weekly Options Advisory. And this video is going to talk about a number of data points that are either confirming or denying the rally that's going on right now. And I wanted to specifically talk about this at this juncture because it's feeling to me like this could be some sort of a bull trap at worst, and the market will collapse back down. But I don't know that. And there's just a lot of different cross currents here currently in the market in terms of, what the market feels is bullish, what the market feels is bearish. And certainly the price action has been relatively bullish. But that being said, it is somewhat different from what we've seen before because we just came off of these two large aggressive moves down that have been bought back up. And I want to talk a little bit about that. So the first data point that I want to mention is something that I talked about in my trading room here on yesterday afternoon, and it was on Wednesday, and it was this alert here that I put out to my subscribers. And I don't talk about volume very often, but I found this very interesting. It was basically I was saying, look, before you get very bullish, here's one data point that's not confirming. So again, this was put out on Wednesday afternoon, which was yesterday. And I said that the volume in the SPY on the daily chart has been falling hard over the last two sessions, with today being very low. And as we know, the market has actually been rallying while that has been happening. And so that kind of strikes me as odd, right? If there's a lot of conviction here, why aren't we rallying? Why isn't the volume, stepping up its game as well? So if you look at the S&P here, I'll just use the SPY, obviously because the SPX is an index and it has no volume. But you can see the precipitous drop off here as the market has gone up. And yesterday was a very low volume session. And if it was just this, I wouldn't think too much of it, but I would say that it's the same in QQQ, same exact thing. As you can see, you've got this move down in the volume with low on Wednesday while the market moves up. And also in, some of the sectors here, such as XLK, very, very low, and XLF, which is financials. These are the top two sectors in the S&P. Is also volume's kind of low. And we'll get into the sectors in a second. That's also going to be another data point, so I don't want to get ahead of myself. But consider this just as one data point, like I said. I think more importantly, what's kind of troubling me is it's relatively rare, I think, to see this sort of large gap down and recovery back to back like this. So what I would say is, like, I'm calling this one DS and I'm calling this one TT. And I say that because this is the DeepSeek low, and we gapped down on the DeepSeek news, and what did we do? Rallied right back up. And this is the tariff tantrum low, which is where we gapped down and again also rallied right back up on the tariff news, right? It was here somewhere in the middle of this session. It was like, okay, heads up, it's going into effect February 1st. And then back down here, it was like, no, it's going to be March 1st, whatever. And the market decides, oh, well, whatever, everything's fine, right? And the main thing to consider here is the fact that each time that we did rally thus far, we've rallied to a lower high, right? The S&P high here is 61.2818. And the S&P high here didn't make it to there, right? It came definitively lower. And now we're moving up aggressively again. And our question is, are we going to make some sort of a lower high again, right? Meaning that what that's going to do is it's going to set up a downtrend line like this, where maybe we meet it somewhere here, right? And that would also be a lower high. And anytime you're making lower highs and you don't break the downtrend, the market at the very least still has potential to go like this. It doesn't mean it's going to go like that. I mean, the next move could be a breakthrough, but there's potential of it, right? As long as you're making lower highs, right? Like here you have a downtrend, and this is a lower high and it goes lower, and this is a lower high and it goes lower. And then only here, when it stops making lower highs, the market actually turns. So you want to keep your TA as simple as possible. So my main takeaway from this, I hate to use this word really, but it's just kind of weird. Like it doesn't really make sense to me that we gap down on these two pieces of bad news and it all just comes right back. And it's fine, the market can do that. But at some point it has to break the downtrend and make a higher, put in a high that breaks the downtrend and actually make a higher high. So keep that in mind. All right, I talked a little bit a second ago about sectors, and I think that's the other data point here that is kind of tricky to me, because let's just start from the top. XLK is always going to look very, very similar to the S&P, because you've got 30.7%, and that's dropped a bit, by the way. You know, this used to be 33.5% last month. Every month the weights change, and now it's 30.70 of the S&P. And so it's going to look a lot like it. And this is 100% retracement of at least this move from here, right? So we'll see what happens. But notice, again, this is the most important sector, I think, in the S&P, and it's just kind of middling. It's not, you can't really say that it's doing anything really, because this is exactly just about in the midpoint of the range. So if it's in the midpoint of the range, again, it has potential that it could turn back down. It doesn't, you know, it's got a long way to go before it gets up to here. And there's been a lot of sector rotation in this market that's kind of kept it afloat, where technology is no longer really the king. Believe me, I'm not blind to that. I totally get that, right? I mean, you have, you know, and that is essentially where things get tricky, because like, look at the XLF. It looks really good, right? Financials look really good. And look at healthcare. Healthcare, it looks pretty good, right? It's middling in terms of the larger range from September to now, but it's definitely moving in the right way. And of course, this sector did not react at all to those two gaps, right? You can see, you don't see that same pattern there anymore. So you have some sectors that are kind of middling and some sectors that are very, very strong. So this is another data point that to me is kind of tricky. And lastly, I want to point something out in the profile that really kind of goes hand in hand with these huge moves to the upside and these sort of emotional moves up. And that is that just over these past 3 sessions since you've moved up, right? Like here's the tariff tantrum gap down, right? We had that, the prior session was really bullish, and then this whole overnight session gaps down in a big way, right? You see that like there's a tiny bit of overnight activity here. Like right here is where we closed on the low, where we got the tariff news. And then the next day, right, what happens is you just move down very aggressively, and you don't even make the overnight low, which is kind of a tell, right? The overnight low can't even get taken into here, and you just start to rally. But when you start to rally, how do you rally? You rally in what we call single prints. And single prints are a sign of emotion. They're a sign of like short covering, especially when they're at the bottom of a range like this. And you can see right here, zoom, you get single prints, and that's on February 3rd. And then the next day, the market does the same thing. Zoom, you get these single prints, which is, again, short covering. That's not the most strongest type of buying. And then what happened today on Wednesday? You also have a tail here, right, where you had some selling that took you into the prior single print section, but there weren't really any sellers, any stronger sellers to take it there. You get a tiny bit of taper at the lowest 12 contracts, and boom, it's off to the races again. And what I'm saying by pointing all this out is simply that this is the type of marking or marks that are left on the profile by trade that is very emotional. And trade that is very emotional is not trade that's going to be sticky. Trade that's very emotional is very two-sided. What comes up fast can come down very fast. And so these are the, I'm just sort of like on high alert for that. Don't misconstrue anything that I'm saying as saying all-out bearishness or whatever. I'm essentially bullish here. I don't have any bearish positions in the market, and everything I've done in my advisory and my own trading, has been bullish, basically. And we were bearish coming down into the tariff tantrum gap down, and we closed the puts on that morning because, like I said, we didn't take out the overnight low, and so we made a pretty solid gain. But we were thinking, hey, we're going to really kill it here because we were short ahead of this move down, right? We were short ahead of this huge gap down. We were short up here in the prior session where it closed really weak, right in here, but we didn't know that the tariff thing was going to go on, and that was like a gift. And I was like, oh my God, this is great. Now the puts were fully in the money, and guess what? Market started moving up very quickly, didn't take out the overnight low, closed the position. What else can you do, right? And then started looking for bullish plays then on. But again, these moves, and I think, those of you who watch closely, even if you don't have the profile software or you're not in my room where I show the profile all day long, which is a nice perk. You get access to this software, which is quite expensive. You get that all day long in my room. Even if you don't have access and are not seeing that, you would have to agree that the moves up have been kind of emotional. And, I'll just leave it at that. Basically, when the moves are emotional, it can go the other way. And you want to carry forward all of these single prints as poor structure. And whenever there's poor structure below you, and it starts stacking up like this, and there's many different types of poor structure. There's single prints, there's VPOCs, right? There's poor lows underneath, etc. There's all sorts of different nuances in the profile. But when they start to stack, I tend to pay attention. So these three sort of single prints in a row has me paying a bit of attention, all right? So that's it, basically. I'll leave it there, It's just, for me, tentatively bullish. I do believe that February could easily just be a choppy month here, because as we roll through the earnings season and get through it, I don't know how much catalyst there is to push the market higher, and maybe it just wants to take a little bit of a break. And we're not going to have another Fed meeting until March, and right now the odds are low that we get a cut. And that can change, of course, because they're data dependent, as they say. But, that's basically it. So to me, that, my friends, is the market in a nutshell, the way that I see it. I hope it's helpful. I wish you good trading. Good night. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.